Good afternoon, everyone. This is Henry. And as we get into tonight's review, I wanted to spend a little bit of time going through the put-call ratio with you because it's one of the more helpful market internals that I enjoy using in an effort to try and time tops and bottoms in the market. And I think this is starting to show us some indications that the bearish part of the past several weeks may be getting close to an end. Now, the way that I want to try and describe that way of thinking is here through the 10-day simple moving average of the put call. So we're going to ignore the tops, ignore the bottoms, and just for a moment, focus on this moving average that has created three, and really I want to show you four previous crests that have helped mark bottoms in equities. So these are our three previous. These are, relatively recent memory. And then the fourth one that I was wanting to show you goes all the way back, which is just to say that the moving average was not above 1.0 until we go all the way back to that correction from 2020. So again, it's showing the moving average right through here, and then here, 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 and where we are now. So to me, this just looks like a situation where, there are ways that you could argue price action is being bearish, and maybe we do have a few more down days. I'm looking at SPX that closed at 42.63 today, and I would continue to work with the idea that this is trying to show us a bottom in equities all the way down to 4,200. So that is a 63-point window, but I wanted to show you these moments in time off that moving average of the put call, and then come back over and look at that against a chart of the SPY. So the first that I had noted was March 19th of 2020. So if you come in and look at where that was, it's 2 days off, essentially showing that moving average was most extreme 2 days before the S&Ps had one of its most formidable rallies ever, right? So that extreme put call spurs a huge amount of buying. And then those other dates, we can go back to, let's see, September 29th of 2022. So that's going to be right through here, showing you that admittedly, it's not always going to be to the day or be able to tell you the exact moment in time. But most of the time, when that put call reading is elevated, you're not going to see a market that crashes because participants are just too well hedged, right? All those puts have been bought, and then it just allows the market to drift back up. So the other two dates that I had noted was December 29th, and then the movement that you saw into 2023. And I'm sure you guys remember what January of this year was like. So there's your other instance of where the put call reading was high. Market spurs a several week rally, does dip back, but does not take out those lows. And it's just being able to quantify moments in time where sentiment is too bearish, and then seeing how that has helped fuel these rallies in equities. So I think there's some of that going on here again. I wanted to keep you on top of that as we prepare for the trades of the next couple of weeks. So I hope it helps. You guys have a great rest of your evening, and I hope to see you in the chat rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.